Right. Okay. So we're up and running. Thank you so much for joining us today, Jonathan. It's a pleasure to have you with us. And as I mentioned to you previously, this exercise is, this is basically an exercise to create some more awareness regarding best practices in the venture capital industry, which we know to be shrouded in some level of secrecy. So the idea is to dispel some myths, hopefully, and also get some, to hear some of your own lessons from the VC sector and how you've evolved as an investor, and any learnings or advice that you may have for those looking to enter the industry. So I guess we can begin by hearing a little bit about you. What got you into VC? What keeps you there? What sort of keeps you going on a day-to-day basis? And we can take it from there.
Yeah. Well, thank you, Adaraj. It's a pleasure to be here. So I'll just give you like my 30-second overview of my background. So essentially, I was a founder for the first part of my career. So that was basically from the time I graduated college up until I went to business school at Cornell. So that's about 8 years, a little bit more than 8 years. So I co-founded 2 companies. I was the CTO of one. And that was a really incredible experience on one hand. I mean, I got my ass kicked because I was my first company, I was a 23-year-old kid and I didn't know anything. And I was just, really, really eager to get involved in software and startups. And the impetus for this was that software fascinated me. And at the time I just graduated college, this was like the boom of Web 2.0. So like Facebook was only a couple years old, YouTube was still an independent startup. iPhone came out that summer. And I just was so fascinated by what I was seeing, and that basically with software, in a vacuum, theoretically, you can create infinite value. You don't need inputs, that are like, resources. You don't need steel, you don't need wood. You just need, and again, this is all like in the theoretical sense, all you need is basically skills and an idea, and you can create infinite value. And that just sort of blew my mind. So I knew how to get involved in that. And that sort of is what drew me to startups. So I started my first company like right out of college, like immediately after graduating from undergrad. And I had no idea what I was doing, but that was, I raised about $1 million for that company, which, is not that much these days. It seemed like a lot back then. Did that for 6 years. Wasn't like extremely successful, but still kind of like got out of the company, were sold my part of the company, and was sort of at par. So it was not like a win or a loss. But at the end of that, I sort of realized how much I still didn't know. And this was like 6 years in. So started another company thereafter, and then realized at the end of that, was a little bit burnt out after 8 years of doing so. And, as a founder, you go really, really deep. So I went really deep on 2 problems. You have to be basically obsessed with those problems. And I think that was a mistake I made in both to different degrees. I wasn't, connected to the problems I was trying to solve at like a molecular level. I thought they were interesting, and I knew they were problems, and I thought I could solve them. But that was a really big lesson I learned. So that sort of threw me for a loop, and I realized, well, I don't have one of those problems, that I know of or that I've discovered yet. That it's just sort of like drives me at a intrinsic level. So I want to try something different. And what's the opposite of being a founder? To me, it was, sort of going really, 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 really deep. You go really broad. And so that was what drew me to venture capital. And that's how I sort of transitioned after getting my MBA, thinking I'll try something different. I'll leverage my experience as a founder. I know a lot of founders, and I can empathize with them, and I'll try to get into VC.
Yeah, thank you so much for elucidating that, and truly commendable. Being able to raise $1 million is more than most can hope to achieve. So that's a commendable achievement, of course. And I quite sort of enjoyed listening to the fact that you figured that going broader is something that is required as a VC, as opposed to being an entrepreneur who needs to be more obsessed about the problem itself. So it reminds me of someone who's doing a PhD. A lot of PhDs also focus on one problem and they really drill down deep into it. Building on your answer a little bit, what would you say then from your lessons through your journey as a VC what makes a good investor?
That's a really good question. There's a really long answer to this, and I think there's no one answer, but I think I'll kind of break it down like this. To me, at least, a good investor is a catalyst. A good investor isn't just capital, because capital is a commodity, and capital is important because it can unlock certain things. But beyond capital, I think good investor is a catalyst for the goals of the entrepreneur or the founders and the company itself. What I mean by that is, you're somebody who helps. Let me back up. You're somebody who is excited by the problems that company is solving. You believe in what they're building. You have to believe in what they're building and their vision. You have to believe that the team, or have conviction that the team is the right team for this and can execute. And that, your role beyond just like sending a check or a wire is to help them achieve those goals in whatever way you can. And so a lot of, in practice, a lot of that comes down to leveraging your network for things like hiring, or for, these could be more junior hires, or it could be more senior hires. It could be connecting other investors, helping to fill out a round, bringing in partners, strategic partners, corporates. It could be just being a thought partner and helping to hammer out a strategy for entering a new market. I've actually spent some time and dropped in a couple portfolio companies just to help them solve specific problems, sort of like a not like a team of consultants, but sort of like a lone, if you were like a lone McKinsey consultant coming in to help a team fix something or figure something out. Those things to me are what good investors do. They're basically like force multipliers. And so it's not just capital.
Okay.
But the second part to that is that you have to believe in the team, and that's important, because you have to get out of the way. You're an investor, and in all cases, you're a minority investor. Venture capitalists don't own majority stakes in companies. And so you need to let the team execute. You can help them and guide them to a certain degree, but you can't force them. And I think that's important.
Great. Thank you so much for answering that. And since the team is such a, it's central to the success of a startup, there's this analogy of the jockey and the horse, the jockey being the team itself, and the horse is, of course, the business and the business model. And in early stage startups, there's a great stress on the jockey or the team. So would you say, sort of building on your previous answer, how would you say one should go about finding the right team for a particular business? And what are the core components of a successful team for you?
Yeah, that's a great question. I tend to put a lot of emphasis on team. Every investor is different and will value and prioritize different things, whether it's product, whether it's customer acquisition. To me, team, especially in the earlier stages and pre-seed and seed, team is paramount. And so I think you need the basics, right? Hey, does the team have the right combination of skills to even build the product or to take it to market? Is the team a cohesive unit? Do they work together? All of the basics, can they do it? But I think ideally what you want is a team who has a vision and a mission, and especially back to vision about like how the future should be in that particular market. And I think a lot of the times this is on the shoulders of the CEO, whoever he or she is. That's the person driving the company forward and really enacting this vision. And what you want, or what I want to see, is somebody who is an expert in this field and truly knows their market, and in the ideal case, like knows it better than anybody else.
Right.
Is whether by prior experience or just by obsession about a certain space. They aren't just there casually. They know the landscape, they know the players, and they know how they have this deep faith about how it should be, and that's what they're building. Beyond that, I think you always look for, or nice to haves are like X factor, connections to potentially customers, or large groups of customers, or to strategic partners, whether that's by like prior experience at a certain large company, and then they have that unique access. Or sometimes it's in the form of community. This is folks who have have online communities, whether on Discord or elsewhere on Twitter, and they're productizing those in a sense, and that's like an early group of users. I think the last thing would just be like this really deep domain expertise and experience that's somewhat rare. I mean, this is case by case, and it depends on the industry the given company is in. But if you, Adaraj, have this like deep experience in this one domain, that's going to totally unlock this product, and it's going to solve like a huge engineering challenge, so on and so forth. That stuff's super valuable. So I think team, there's no like rubric that you can just take and check the boxes off to assess them. It's always case by case, but there's so many factors to consider, but those are just a few.
Great, thank you. Yeah, so I mean, from what I hear is that operational experience becomes key, becomes a key attribute of a team here, right? Having experience in a particular segment which you're looking to invest in, having worked in a startup.
I would say not necessarily operational experience, like that's good. I think what you want is somebody who has just sort of a fluency in a space and a domain knowledge, whether that's from prior experience or it's because they've been involved in the space. Like take gaming, for example. Somebody might have been just a very impassioned gamer for since the time they were 12, but they haven't necessarily worked for EA or something like that. So it's always you have to decouple the two.
Right, absolutely. So even a user can have a very unique perspective, of course. So even that's a valuable addition.
Right.
Great, thank you. So looking a bit more outward now. So what are some areas or verticals that you see considerable opportunities for growth? What are some hot areas for you in terms of investing?
So this is always a interesting question. I think you can look around and sort of read TechCrunch and other like tech periodicals and see sort of what's hot. I think to me, I think at the stage I invest in, which is the pre-seed and seed, I think less about the actual vertical than I did when I was working at the Series A. I think a lot more about teams and about the advantages and early strategies enacted by like very early stage companies. That said, personally, there's a couple of spaces I am really excited by. The one that's of course dominating tech news and Twitter and everywhere else, of course, is Web3, NFTs, gaming. But for me, it's something different than maybe hopefully than just the general hype out there. For me, I'm really excited by things which create opportunity on a large scale, and I think what we're seeing with like crypto gaming and play to earn is super interesting from that perspective. Like take Axie Infinity, for example, which is the largest like crypto-based game. During COVID, that actually propped up the entire middle class of the Philippines and is letting folks feed their families in a country and at a time when the economy was really hard hit and folks were really suffering. And that's just absolutely amazing to me that you can game, support your family in a way that's even more supportive. Basically you're making more money to put food on the table, for your family than you were previously in whatever job or industry or trade you were in before. And that's a foundational shift in that economy. And that happened in the span of 4 years, but it really happened in terms of when this all got running in the Philippines, but also basically starting from January 2021, which was the NFT craze. It's just absolutely amazing to me, and so I'm really excited by other opportunities to basically bring opportunity like that to all parts of the world. I think another vertical really interested in and hopeful for is sustainability and climate tech. That's just super important. We have to rebuild the entire economy from the ground up in a sustainable way, and that's the biggest undertaking and going to be the largest economic opportunity ever, right? Trillions of dollars. So that's paramount. I think beyond that, I could keep going. I mean, there's so many things which do excite me, but I mean, generally, like I'm excited by things which are, which sort of intersect with the upcoming generation as well. You know, Gen Z is going to be the largest segment of consumers by 2026, and you see a lot of crypto and a lot of new fintech companies and a lot of, you know, seed stage and pre-seed stage startups right now are being, especially in my portfolio, are being founded by these young Gen Z founders who have completely different attitudes towards technology and are much more comfortable with it, grew up with it. I think stuff that's on the bleeding edge right now, at least in terms of consumer technologies, that stuff, you know, intersects, you know, with different generational tailwinds than say like my generation, you know, millennials who grew up completely differently. So there's you know, tons of spaces out there, and you know every investor is going to have his or her own preferences, but like right now those are things which are top of mind for me.
Yeah, thank you so much for answering that. Yeah, all very exciting sectors indeed. I in fact am working on a project aimed at tokenizing carbon credit trading. So yeah, very nice. It's an exciting space to be in for sure.
Very cool.
Yeah, so sort of turning our attention now to RareBreed, you know, from what I understand, it's a venture capital fund that wants to be able to provide value and sort of, you know, focus on startups that are missed out by traditional VCs. So, you know, just speaking a bit more to that and understanding what support does RareBreed provide to entrepreneurs and how it differentiates itself from the larger market.
Yeah, so RareBreed right now, we're a small pre-seed and seed fund. We invest primarily outside of San Francisco and New York. I'm San Francisco based, but I think what we've seen is over the last 2 years, so basically coinciding with the start of COVID, the private markets, the venture capital market especially, has gone crazy, especially here in San Francisco. You know, the valuations that are being thrown around, the round amounts that are happening, and how quickly deals are getting done. This is all radically different than it was just in 2019. And so that's led to a lot of amazing companies growing rapidly in a very short span of time. But it's also led to, you know, crazy valuations. I've seen a couple $100 million valuation seed rounds, which is just mind blowing. That you know, can a company truly be worth $100 million at the seed? I mean, that's I'll just leave it there. But I think, you know, that's done is also shifted a lot of the focus and like increased the myopia of Silicon Valley. You know, in New York, I'm not a New York VC, so I can't, you know, speak to this as much, but at least here, I feel like in Silicon Valley, there's very much of a bubble mentality, and there's so much happening here that, you know, just to sort of like keep pace, you could spend all of your time only looking at companies that are here. But it's a big country, and I think what we've had happen in the same, you know, span of time, the last 2 years, is that, you know, with COVID, opportunity has been distributed sort of globally and elsewhere as people have moved out of large dense cities, and this has only like furthered the amount of startup activity that's happening in what would be, you know, relatively considered far-flung places. You know, it could be the Midwest, right, area, or even some parts of the South. There's startups everywhere now, and I think what has not happened enough to date is that there's still, like, you know, capital is very, very lumpy. It's basically centered here in the Bay Area and in New York, but everywhere else there's just, you know, comparatively just a trickle of venture capital. And so that means there's companies who are not close to capital, who have historically lacked access to capital in the same way. That, you know, if you're from Tennessee and you're building your company in Memphis, Tennessee, you're just less likely to be in the first or second or even third degree networks with the investors who have the most capital, who are going to be, you know, in the large coastal cities. So what we found is that there's actually amazing entrepreneurs in those places, building companies that are doing amazing things. And often, like, these folks are grittier and more resourceful and have to resort to being, you know, extra creative to make their companies work, you know, without the connection to large pools of capital. So if you can't, if you're raising only a tiny amount because that's all you could, because you just weren't in the right networks because of where you live, then in order to reach a certain level of success, you just have to kind of have a higher degree of grit. And that's what we find a lot of times with these founders who have reached certain super impressive milestones, but are not anywhere near a traditional seed of capital.
Right.
Oftentimes those companies have the opposite. They're like very undervalued compared to like what's happening in Silicon Valley, especially. But those are founders who are very much deserving. And a lot of the times those folks are much more diverse crop of founders than you have in San Francisco or New York. So that sort of correlates with companies being built outside of the major startup outlets.
Okay, thanks. That's totally insightful.
Yeah. However, I will say, but we do about 80% outside of SF New York, 20% still SF New York.
Yeah, definitely. I mean, even looking at the deal flow in recent times, there has been some more interest, between the coasts. So great to hear about that. And yeah, we'll wrap up with this one final question, the golden question, of course, which is, what advice would you have for those looking to enter the venture capital industry?
Yeah, great question. Of course, VC is hard to break into because it's a small world, and when roles open up, folks look to their other network of investors. Hey, who's good? Or do you know somebody? And that's a lot of the times how roles get filled. And it's also an industry where sort of a catch-22 problem. Whereas, if you're not the recent college grad and you can't get the analyst position somewhere or like an internship position, and those are basically the only roles where there's no experience expected, or nor at least parallel experience expected. Let's say you're an MBA, you're graduating and you're interested in venture capital, then you're going to likely be looking at a associate or senior associate role, post MBA, and then you're in a different pool of folks. You're in a pool of folks who are competing for those jobs, who maybe did work at a VC firm when they were out of undergrad, and then maybe went off to a startup or something like that, or they worked, for a startup in the portfolio, a very successful startup in the portfolio, for a bigger VC, and that company exited, and they got, to know some of the investors during their tenure there. That's actually a very common pathway into VC roles, is that portfolio company success case route. But you're the recent MBA grad, and you're trying to transition in from a different industry or consultant or whatever. It's much harder, and just because of that. And so my advice would be to kind of take stock of what you can bring that's unique, whether that's a specific insight or experience or expertise in an industry or in a vertical or in some function, like engineering, or some especially advanced domain of engineering. Let's say you had worked on computer vision or machine learning models or stuff like that. That sort of thing will help you make your case as to why you can add unique value, and they should hire you versus the folks who had this other more common experience that the VCs hiring for junior VCs are accustomed to. And that also is important in terms of where or what type of fund you target. There's various flavors of venture capital funds, right? There's the highly verticalized or highly specialized funds. There's the bio life sciences funds. There's the funds who just do prop tech and real estate tech. There's funds who just do AI, ML. There's funds who do deep tech. There's funds who only do hardware. There's funds then who only do SaaS. There's funds who are then my fund, far more generalist. So the generalist case, trying to go to a fund and say, hey, hire me as a generalist yourself, I think is a much harder route than going to a specialist fund and saying, hey, I'm Adaraj, I'm a specialist. I worked in real estate investment in the traditional sense before. I'm interested in prop tech, or I, I'm a electrical engineer by trade or something like that, and I'm you have natural value in the hardware space. Whatever it is, I think you have to kind of consider what you want to do and what you want to invest in the context of your experience, because it's going to be easier for you to get the job in the vertical where you have that sort of unique value, by virtue of prior experience or whatever it is. But you have to ask yourself, is that something you really want to invest in or excited by? Because if you're not, then okay, that might get you into venture capital, but then from there, you're gonna have to figure out how to basically change lanes to either being a generalist investor to some other specialization. So I think just basically take stock of what you have to offer and really understand the various types of funds that are out there, and kind of have a short list of the ones you want to work for. And then lastly, the best way in is to create relationships with folks in the industry, especially those who are actually have authority and are hiring, so the partners if you can, and do so over time. And that's a very hard thing to do, but I think that's the one thing that's closest to a silver bullet, is if you can build a relationship and add value or bring value in the form of passing along or sourcing high quality companies that are of interest to the VC on the other end. That will build goodwill, and that will build a relationship, and that's a very hard thing to do, but it's also something that if you're really interested in getting into venture capital, will get you some attention. But that said, it's just, there's no, unlike other industries that MBAs are accustomed to going to, there's no pathway and there's no recruiting. You have to be very creative and kind of just chart your own course.
Absolutely, and which also makes me sort of think that a lot of professionals find themselves in a situation where because finding it difficult to enter the sector head on, they look for other stepping stone roles that allow them to gain that experience and be able to add value, and then possibly get into VC. So to your mind, what are some of these stepping stone roles that one can look for if they're having a hard time breaking into the VC sector directly?
Yeah, what do you mean by stepping stone role?
So as we discussed earlier, having operational experience in a growing tech startup, possibly working in banking, although I feel that might not be entirely relevant to early stage, but yeah, any opinion you might have on?
Yeah, I'd say I can't speak for New York, where there's more influence from traditional finance, but here banking is not going to help you unless you want to be in the later stage or growth stage funds, where it's going to be more spreadsheet type of work. If you want to be an early stage VC, I think banking is definitely not going to help you. I think if you're thinking about longer term getting into VC, so maybe it's not what you want to do post MBA, but down the road, I think there's really like two things you could do which would give you amazing experience. One is to be a founder and go raise venture capital yourself, and hopefully be successful. And even if you're not, you'll still have you have great experience that will be regarded as such, and you'll also have your own hopefully your own set of investors that you'll get to know very well on that journey. But the second part is to go join an early stage company that is growing fast, that you really believe in, and you believe in its mission, and go kill it. Go be a rock star employee at a startup, and join somewhat early, and you'll go through all of the phases. If it's a fast growing successful company, you'll go through all of the phases and all of the bumps in the road, right? With you go from 5 to 20 to 50, to 150 employees. Those are all basically a set of growing pains that companies go through. You'll be there on the inside, and you'll understand and see how messy startups are, and you get a sense of the chaos and be able to understand how to be successful and thrive in that environment.
Right.
You also have a empathy for founders. You understand more about how startups function, and all the problems that they every startup, on the when you peel back the pretty website,
Right.
is facing internally, and how much work it can be, and so on and so forth. That's a great experience to have.
Right.
If you're going to invest in startups and give them advice and help them. You
Right.
have to draw on something concrete to
Right.
actually add value in that domain. So I think that those two things would put you in the best position. I think obviously it's much easier to go join a company than to go start a company and raise a bunch of money.
Right. Great. Thank you so much. Graciously answering all of the questions that I
Yeah,
had.
of course.
And yeah, I certainly derived a lot of value from it, and I'm pretty sure many others will also be able to, help gain some perspective from this session of ours. So thanks again, Jonathan. It's been an absolute pleasure having you with me today.
No, thanks, Adarsh. My pleasure, and great to be here. Thank you for your time.
Thanks so much.